What's up? It's your guy Tajir, aka the Capital King. And right now, I want to talk to y'all about long-term investing. So, I had to stop. I have Shake Shack. They were my best performing stock. I got over a 50% return on them over time. I was invested with them for over a year, and I woke up the other day and I checked it, and my stock was down 14%, negative 14%. So I went from 50% over to 14% less, negative. I'm not even gonna lie. I was devastated when I first looked at it a little bit but then I remembered I am a long term investor. So short term shifts or changes in the market really they don't really affect me like that. Because you have the company's intrinsic value, which is their real value, and then you have their market price, which is what traders and people want to sell and trade, what they think about it. So as long as the intrinsic value of the company is good, the market price really doesn't matter because it will always change to reflect closer to the intrinsic value. And I bought Shake Shack because I was going to places all over Westchester, all over New York, and I just constantly kept seeing Shake Shack, Shake Shack, Shake Shack, Shake Shack, and they were all filled and packed up. And I was eating there, and I'm like, yo, I like the food. Like Shake Shack is a vibe. So I'm like, okay. And then I thought about the industries that they're in. They're in fast food. So I would personally classify them as like gourmet fast food because they're a lot better than McDonald's, Wendy's, Burger King, you name it. They're really not perfect though, because when you eat it, you still know it's fast food. It's filling, but it still doesn't give that real, you know what I'm saying, home cooked meal vibe. But it's one of the best fast food types that we have at the moment, in my opinion. So I was like, yo, let me throw some money in them, and it's done really well for me. And I'm going to keep investing in them, even though I'm down negative, because I believe in their intrinsic value and I believe in who they are and what they represent as the company. So I'm going to continue throwing more bread in there because it's just going to go back up because they're a vibe. So I say all this to say, as an investor, if you're a long-term investor, because you have short-term investors, you have long-term investors. If you're a long-term investor, it's really like about having patience and being able to see your stocks going up and down and up and down and up and down, and not, jumping with the hype or jumping to sell or jumping to buy, to just kind of keep up with a constant flow, because all these different things are variables, the market price, what people think about the company, all these different things are variables, but you have to be the constant in what you're going to do with your money with this company. Warren Buffett didn't become a billionaire until very later on in his life. It was like 55 years after he was investing heavy, that his net worth was like this. So let's say it's here, 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 pew, literally, pew, shot straight to the sky, because he made intelligent investments and just kept going. He didn't care that he wasn't making 120% return. He said, nah, this is a good company. Let me keep going. Boom, network shot up. So this is what I'm saying. I'm really just saying, be diligent, be thoughtful, be educated, and keep going. Be consistent. Capital King signing out.